Hey everybody, hope everyone's doing well and had a good trading day. This is the Emini review for Thursday, July 18th, 2024. And we'll start with the daily chart. The market has been in this bull channel and it's had nested 3 pushes up. And so if we zoom out a little more, you can see 1, 2, 3, and then up here we've had several legs up. So it's becoming a little climactic and exhaustive for the bulls. So the expectation is sellers above the bull channel line and probably maybe 10 bars and 2 legs of a correction sideways to down. And we had this gap down. If you look at the extended hours chart, you can see the big bear bar. It's not great. I can't really hide this bar, but same idea. 3 pushes up, 3 pushes up here. Big bear bar inside of a tight trading range, but enough that it's probably a leg 1 and it'll probably get a second leg. Big enough surprise. Bulls who bought up here, disappointed by this bar. Bad sell signal bar. Bulls who bought below this bar, also trapped. So this was a pretty major surprise for the bears. We've been in this channel, but now we've gone sideways for, at least 5-6 bars. We're going sideways fairly far above the moving average. And again, we've had exhaustive climaxes, 3 consecutive legs up. It was nested in here. And so the bulls likely exhausted. We're in a trading range. And when you're this far above the average price, eventually the bulls are going to stop buying. The bulls buying far above the moving average are buying momentum. And when the momentum fails to continue, eventually it starts to wane. You have a lack of buyers up here, and the market has to go lower to find buyers. The bears know that, and they're going to sell as well. So we had this surprise. I think the expectation coming into the day was any pullback would likely lead to lower prices. I thought specifically the midpoint of yesterday's range would be resistance, and the low of July 16th, that breakout point, would also be resistance. Bulls who bought here, trapped on the bear bar. If we retest that low, there's likely sellers at that price. I've also been mentioning that this channel, this trading range, we could easily come back down and test the moving average in a vacuum style. And let me just draw the low of the 16th. I'm not sure if we tested it, but I do want to see that. Yeah, so we didn't quite get there. However, something interesting about the open of the day. If you look at the midpoint of yesterday's range, which will be the red line, you can see that's just about where the day opened today. So this red line expected to be resistance, but it's also the middle of this range, which had a lot of trading range price action. So the expectation coming into the day was more trading range price action. Now we also had an expanding triangle to end yesterday. And expanding triangles are breakout mode. You're getting higher highs, lower lows. In this case, we have about 7 legs. You could say 1, 2, 3, 4, 5, 6, 7. And now we're heading up for an 8th leg. So the bears are hoping there's resistance at the bull channel line, this upper red line. and there's a reversal. The bulls are hoping that this tested the bottom of the bear channel line, reversed up. Now we have a gap up, and this will continue into a bull trend and break out of the expanding triangle. So for the open of the day, we have a fairly big gap up, but it's to the top of a trading range. And actually, one more thing. I like to look at the Globex session. In this case, you could get away with not looking at it. You can see that the gap up is likely just a vacuum test in a trading range. But if you did look at the Globex session, what you would see is that the market was sideways for a lot of bars. So here's the open of the day. Here's the close of yesterday. So this area here was the overnight, and you can see it's a trading range. So trading range price action coming into the day. And so again, here's yesterday's close, here's today's open, and that's why there's a gap up. But does the gap look like a strong bull trend or a tight channel? Of course not, it's a trading range. And so we can look at the day only session, the gap up, as an exhaustive climax or a buy vacuum test of resistance. So coming into the day, the gap up, bar 1, rejected the gap up. So we have a bear bar after the gap up. Disappointing for the bulls, but big enough gap. Consecutive bull bars, if you take the gap as a bull bar, bar 81, breakout, and then more breaking out on the gap up. So big enough breakout, the odds are we'll get a second leg up. So bar 1, probably buyers below bar 1. But bad buy signal bar above bar 1, so likely sellers above, especially in this context, fairly high in an expanding triangle. Bar 2, we rallied. The bar closed on its high, closed above bar 1, and it closed above all these bars to the left, closed above the prior highest price in the expanding triangle. But look to the left, we're still within the trading range, so the bulls still need to do more. Good bar for the bulls, but they really need to see follow through. And the odds are, with the overlap on bars 1 and 2 and the overall context, it's probably sellers above bar 1, scaling in higher. Bar 1 is also a bad sell signal bar, so there's probably buyers below. You can look at it as a low 1 short. So buyers below 2, sellers above 2. And then 3, traders sold the close of 2. We had a bear trend bar on 3. So there's a couple things I want to say about up to bar 3. There's a lot of overlap already coming into the day. The first 3 bars all overlap each other, and we have an expanding triangle within an expanding triangle. So we sold off, we rallied, we sold off again, and look at all the overlap. So the odds are there's buyers below 3, scaling in lower, and we'll probably test back up to the high of this tight trading range again. We don't know if the bottom of the trading range is all the way down here, so we could sell off down, test yesterday's low before we rally again. However, the first 3 bars have so much overlap, and it's sort of big up, big down, big confusion, and we have the gap up. So I'm not sure that bar 2 was the second leg for the bulls. A lot of times you see the fractal nature of price action in these leg 1s with minor second legs, and then they get bigger second legs. See if I can find a quick example. So for example right here, bars 40 to 42, strong enough breakout for a second leg. Is bar 44 the second leg? Well, it is a second leg. We rallied, pulled back, rallied again, tested the high close, but that's more of a minor second leg. It's more likely part of the first leg. And then you can see we've got a deeper pullback and then a more symmetrical second leg up. So that I think that's what we have here with bar 2. The gap up, you can call that a pause on 1 and then a second leg on 2, but this is tight enough that there's buyers below 2. We'll probably rally for a second leg. So that's the problem with selling 3. Tight trading range, overlapping bars, big up, big down, it's bullish, they sell, it's bearish, they buy. So probably buyers on the close of 3. And just one more thing. If you think about a bull who bought the close of bar 2, they're disappointed with their entry bar on 3. But that's sort of a minor disappointment. Bulls are not panicking out of this trade. If bar 4 looks like bar 3, that's a bigger problem. So everyone's watching for the follow through. But the odds are, bulls, if they bought the close of 2, they're probably scaling in lower, like buying below bar 2. But they are so disappointed with bar 3 that they might just look to exit their original buy on the close of 2 if the market gets back to the close of bar 2. So bar 2 close might be resistance. And then 4, doji bar, disappointed the bears. So there's disappointment in both directions. Bull breakout, no follow through. Bear breakout, no follow through. The disappointment for the bulls is worse than for the bears. Bar 2, bull breakout, followed by a bear breakout. But the bear breakout was followed by a doji. So there's probably sellers above bar 4 for a second leg down. You can argue bar 4 already is a second leg down. We sold off on 1, deep pullback, sold off down to 4. So some traders will argue it's a gap up, 2-legged pullback. You can buy above 4. It's not a very good buy signal bar, it's a trading range bar, but there is an argument to be made. And plus, we'll probably get up to a new high of the day. It's an expanding triangle open, and the bear breakout doesn't look very strong. Bear bar on 5, we triggered the high 2 above bar 4, but then reversed down. But bar 5 became a low 1 sell signal bar, and it's right at support. We're at the moving average after a gap up in a tight trading range, so there's probably buyers below 5. There's also probably sellers above 5. It's a bad buy signal bar, but because of the context, the high of the trading range is probably at least up here, if not a little higher. So bears, rather than selling directly above 5, they'll probably look to sell a little bit higher. So there might be an imbalance here, a lack of sellers. And then bar 6 got vacuumed up. And that's what I'm talking about with the imbalance. Nobody wanted to sell the low 1 at the bottom of a trading range at support, and no one wanted to sell directly above the bar, even though it's a bad buy signal bar. But up here, you can see the market stopped right around the close of bar 2. Bulls got trapped, scaled in lower. They were able to avoid a loss. 6 is a strong enough bar that it might get a second leg, but the danger with 6 is that it could be a second leg already, with the gap up and the rally up to bar 2, pull back. Now we're rallying again on 6, and the market's high in a trading range, or an expanding triangle. But again, the momentum up on 6, probably strong enough, we'll go at least a little bit higher. The bears would likely want to see a second reversal, so the first reversal down will probably fail. 7, follow through for the bulls, breakout and follow through. You can notice the tail on bar 7. So this bar started off selling off. We sold off for a few points right around the bar 2 close. Minor disappointment, so the bulls exited longs, but then we pulled back after this breakout. We tested this breakout point, didn't quite get to it, and then we ended up getting a rally with a micro gap from the high of bar 5 to the low of 7. There's a gap. We're also breaking out to a new high of the day on bar 7. But 7's relatively weak bar compared to 6, plus it's overlapping 6 by a good amount. You can also argue we haven't broken out of the expanding triangle yet. We're still within that trading range, so the bulls still need follow through here. And then bar 8, we have a strong looking bull bar. It's a bull trend bar closing on its high. But I specifically remember bar 8, and I want to touch on this. And I got this stat from Ali. He says that something like 25 to 35% of the information is lost when you're looking at a static chart. So at the end of the day, you have all the bars here. We're going bar by bar. You're actually missing a lot of information because you don't know how the bars behaved intra-bar unless you look at a lower time frame chart, which I guess I should do in this example. The point I'm making about, or the reason I'm bringing that up, is that I remember that bar 8 was still around its close with about 40 seconds left in the bar, and then it rallied and closed on its high. But it actually reminds me of this bar over here on the daily chart. Strong looking bull bar closing on its high. But remember, we open the bar, look at the 5-minute chart. It's a very broad bull channel, basically a trading range. And I suspect that's what bar 8 looks like on a smaller time frame chart. So if we go up to 1010, look at a 1-minute chart. Here's the close. Oh, that's not right, is it? 1010 here. So here's the first bar, the first minute of bar 8. We rallied a little higher, sold off, spent a lot of time near the open. You can see the bottom tail on the final minute of the bar hanging around the open of the bar. And then in the final minute, we rallied. So if you crack open the bar, we have leg 1, pull back, sideways, and then leg 2. Plus, on the smaller time frame, 1, 2, 3 pushes up. Might be a parabolic wedge. Might even be a wedge over here. We can get distracted looking at the lower time frames. The point I'm making is that bar 8 is not as strong as it looks. And I just wanted to point that out because I specifically remember that one. So, strong bar on 8, but a little deceptive if you weren't watching. But there's also hints. You don't have to be watching to know that this isn't the strongest rally, with the overlap on 7 and a little climactic on bar 8. Now bar 8 is breaking out of the expanding triangle, and we need follow-through. So the bull is looking for follow-through after bar 8 on bar 9. And then that's what happened on bar 9. The market rallied above bar 8, but then reversed down. We have a bear bar on 9. Now I said this is strong enough for a second leg. So the odds are there's buyers below 9 for at least a small second leg up. There is an increased risk that we just sell off below 9, and that's because there's a lot of nested wedges. You can look at it a bunch of different ways. First of all, we have this one, 1, 2, 3, and right here, rally, deep pullback, 2, 3. And then we even looked inside of this rally from 6 to 8 or 9. There's probably 3 pushes up in there. So increased risk. The market sells off below 9, but more likely buyers below 9, brief second leg, and then a reversal. So probably buyers below 9 for a minor second leg, but 9's a high one with probably more sellers above the bar. It's a weak buy signal bar, and the context is bad. The bulls are attempting to break out of an expanding triangle, but you have to judge the strength of this breakout. And bar 6 is strong, but the bulls really would have been better if bar 7 looked just like bar 6 and closed way up here. But instead, we got a deep pullback, and then this bar was more of a trading range bar on bar 8. And then we had an outside bar on bar 10. We triggered the high 1 above 9 and then sold off. So now we have a second leg up for the bulls. We rallied up to 8, pulled back, rallied on 10, and then reversed. So that's a micro double top. Rallied on 8, went down on 9, rallied on 10, and then went down on 10. So you could view that as a second entry short below bar 10. Some bulls might exit below, but technically there hasn't been a pullback. It's a micro channel since bar 4, so there still might be buyers below 10 for a brief second leg. And then bar 11, we sold off, but then rallied, and the bar closed on its high. Now we have a technical high 1. Some traders view it as a high 2, high 1 above 9, high 2 above 11. There's one more thing I wanted to point out, actually. And that is the Globex range and the stat with that. Let's switch this to the 15-minute really quick and just draw a couple of lines. So the stat I want to talk about, that 90% of days break out either below the low of the Globex range or above the high of the Globex range. So here's the low, here's the high. Now, coming into the day, we'll go back to where we were. At this point, we're up here on bar 11. The bulls have a high 1. But again, you kind of lose this with static charts, but you can sense the market energy when you're watching the charts in real time, tick by tick. And you can see that, yeah, this looked like, at this point, it looked like we're going above the Globex high. And by the way, the market can also go above the Globex high and then below the low and vice versa. But most of the time it just breaks out of one side of the range. Unless the range is especially small, then there's an increased risk of going outside of both sides. But here, it looks like we're probably getting to the Globex high, but then the market starts to stall. And then we go sideways for 2 bars, 3 bars, 4 bars. Now we have a high 1 on 11, but we know that high 1s often have sellers above and get deeper pullbacks. And then you also combine that with the context. Expanding triangle, the market's high in a trading range. So if there's sellers above this bar, we might actually not get to the Globex high. And if there's sellers and then we get a strong signal bar, we could easily start to fall back down. And then the probabilities can shift to less likely we're going above the high, more likely we're going below the low. So that's my thought at that point. And then we got bar 12. And I think bar 12 sort of confirmed my suspicions about the fact of, are we going to the Globex high? It might have been 60% at this point, but then the probability starts to dwindle. And then at this point, maybe 50%, maybe 55%, we are a lot closer to the high, but at this point, it becomes 50% at best. So I just wanted to show the Globex range there, because I was also thinking about that at the time. I also thought it was a sign of strength that the high 1 didn't even trigger for the bulls. Bar 12 did not go above bar 11. So the expanding triangle is continuing. It looks like the bulls are failing to break out and the bears are getting a second reversal. Bar 12, strong sell signal bar. Context is good, 2 or 3 legs up, top of an expanding triangle. Plus the context is bearish on the higher time frames, especially with the huge gap down and the bear day yesterday. And then just one more thing, and this gets into the market cycle. Oftentimes, well, here's an example of the market cycle. The market cycle has 3 phases: the breakout phase, the channel phase, and then the trading range phase. So you start with a breakout. Here's a strong 3-bar breakout for the bears, pretty deep pullback, and that would start the channel phase. And then the market continued down in a spike in channel fashion and eventually converted into a trading range. It's common to see the market test the start of the channel phase, which will usually become, in this case, the top of the trading range. So the high of bar 10 yesterday was the start of the channel phase, the pullback, and then we started the channel down. The market became increasingly two-sided, and now we have an overall trading range. Look at this chart. You don't call it a bear trend. Up to this point, you'd probably call it a spike in channel bear trend, but then at this point, you would call it a trading range. And that's what we had. Spike, pullback, channel. The market is testing the start of the channel. And so there's an increased risk that this is the top of a trading range. And we've had a couple of legs up, and we'll get a couple of legs down. Plus 12 is a strong sell signal bar. The context is good for stop orders. Bulls will exit below 12, bears will sell. And then we got this huge bear bar on bar 13. 13 is a big surprise. And is bar 13 the third leg down? Expanding triangle on the open. Down on 1, down on 4, down on 13. Well, 13 is not like the other bars. You can see that 13 is the biggest bar by far. It's actually an 18-point bar. The biggest bar before that was 10.75 points on 6, and 6 was one of the biggest bars up to that point. And then we had almost double the range on 13. So 13, the range is expanding. Strong signal bar, and then big breakout bar on 13. Now the bears still want follow through because this could be a vacuum test of support in an overall trading range. But if this is the trading range, the bottom of the trading range could be below yesterday's low. And there's enough momentum. This breakout is probably getting a second leg down. And then there's follow through selling on 14. And so this is probably a strong enough breakout to reset the leg count, kind of similar to over here. It was kind of big up, big down, but strong enough breakout from the bears to reset the leg count. Any reversal will likely be minor and then lead to lower prices. So that's my thought at bar 14 today. And then just actually one more thing. Because 13, you can argue, is it a big sell vacuum to the bottom of a trading range? There's a good example of what I want to show not that long ago. I think this is it right here. This works. This does the trick. Big down, big up, big down, big up. Look at these bars. There's big bars. The bar size is actually different. But that doesn't matter. It's all relative. Price action is relative and it's fractal. So there's a difference between 45, 46, and 47 on this day and what we're seeing on the chart today. 3-bar breakout and bottom of a trading range, but we've had these big swings in both directions, and it's been largely sideways here with a lot of overlap, not much space between the bars. And then for today, it's an expanding triangle. We have a lot of tests up and down. We just failed to break out. Now we're getting a stronger breakout to the downside. Compare this breakout to the bull breakout. Decent bar on 6, but then bad follow through, weak follow through, small bars, not really breaking out. 12, 13, 14, these are good bars, big micro gap. Bear bars closing near their lows, trapping a lot of traders. You always have to think about trap traders. And I'll actually give another example of that in just a few moments. But my thought at this point is strong enough bear breakout. It's probably leg 1. We're probably going lower. Always in short. Okay to be short for any reason. 15, we went a little bit lower. And then you can see there's support at the bear channel line of the expanding triangle. So 15 attempted to break out of the expanding triangle, but failed. We're probably going to pull back. Most breakouts do pull back. And because of where this is occurring inside of a trading range, the odds are we'll pull back to some resistance level. That could be yesterday's low, which I should have had that drawn. That should be blue. So we broke out below yesterday's low. They could also be breakout points from today, like here, the bar 4 low. But again, strong enough bear breakout. This is the defining characteristic of the day. Huge bear breakout, breakout mode, expanding triangle. We're getting the downside breakout. Is 15 a good buy setup? Of course not. And the first reversal up will likely fail. There's sellers above. So sellers above 15, scaling in higher. 16, we had a bull bar closing on its high. It's a bull reversal bar, but again, likely a minor reversal. Probably not going to be the bottom. It's a micro level bottom, but this is so tight. It's a strong breakout. Any reversal will probably lead to sellers above and a second leg down. Now I want to mention trap traders. I'm going to clean up the chart a little bit. So let's imagine we have bulls over here. Bull breakout one leg down. The bulls are arguing that we have a high one. They don't want to buy above it, so instead they'll buy below it, betting that a second leg will lead to a high two. They'll buy below and look for a second leg up. Reasonable thing to do. And then, let's say they keep their order, and then they get trapped on 13. So there's bulls who bought below bar 11, and then they get 13, 14, 15. Now that is an example of major disappointment. In trading, there's always a major and minor version of everything, and that even includes emotions. So remember what I said over here. Bulls who bought the close of 2, disappointed, but it's minor disappointment. So bulls can just buy below the bar, scale in lower, and they'll probably be okay. Bears, they sell above bar 5, they're disappointed, but overall trading range, they can probably sell higher, they'll be okay. Scale in, exit at break even. But now we have this huge breakout. The market went a huge distance against the bulls. So the bulls are very disappointed at this point. But what does Al say? If you do something reasonable, there's a 60% chance you can scale in and make money, and an 80% chance you can scale in and avoid a loss. And so I'm going to demonstrate what he means by that. If a trader bought below bar 11, scale in lower above a bull bar, closing above its midpoint, like 16, closing on its high. They're so disappointed. What I mean by major disappointment, the bulls are so disappointed, they don't even care if they make a profit on the trade anymore. They're just hoping to get out at break even at their average price. So if you bought below 11, bought more at the 16 high, this red line is your average price. If the bulls get there, they're at break even. They say, phew, I avoided a loss. So you have bulls desperately trying to get out on a bounce. You have bears who missed the sell-off. They also want to sell a pullback. It's in line with the breakout point, the bar 4 low. So if the market gets here, that's an area of resistance. Plus the moving average will be around there as well. And then look what happened on 17. The market vacuumed up to that area. 17 actually tested that lower red line, which is the midpoint of the buyers from the 11 low to the 16 high. As strong as 16 and 17 look, it's really funny. The market tends to do similar things on consecutive days, and this is a great example of that. Bear breakout, big deep pullback, but still led to lower prices. Bear breakout, big deep pullback, but probably still going to lead to lower prices. Strong, well, it looks like a strong leg for the bulls, and it is a decent move. But the overall context, it's still smaller than this bear breakout, and it's about, well, let's look at one more thing. Again, the chart's getting busy. I'll remove some of these lines, but what I'm trying to see now is a 50% pullback. So we have this upper horizontal line, that's the bar 4 low breakout point. This middle red line, the midpoint between the low of bar 11, the high of 16, where bulls are looking to avoid a loss, and then the lower red line is the 50% pullback from the high of bar 12 to the low of 15. You can see there's reasons to get short in here, or if you're long, to exit longs. So sellers in this area. And then you can see what happened on 18. The market went a little bit above 17, tested the moving average, tested the bar 4 low to the tick. We got a perfect breakout test there, and then reversed down. And again, it's similar to yesterday. Strong breakout, so a low 1 is actually a reasonable sell. Strong breakout, deep pullback, low 1, but after a strong breakout, you can take a low 1, and it's a reasonable sell. So the same applies here for bar 18. You can argue there might be buyers below 18 for a second leg up for the bulls, strong enough rally up to bar 17, but you can see exactly what happened. The bulls were very disappointed with the bear breakout, and they took their break even and they exited their longs. And it looks like bears sold as well. 18, a decent bear bar. So there might be buyers below 18 for a minor second leg, but there's also sellers below 18 looking for a swing down. 19, another bear bar. We sold off below 18, but then pulled back. So not a great entry bar, but the flip side is that it's not a good signal bar for the bulls. Bull breakout, but minor leg 1, and then a high 1 above 19. Weak signal bar, minor setup, There's sellers above 19. And then we didn't get there. 20 sold off. Bear bar closing on its low. Momentum coming back. Strong enough bear breakout for a second leg. Deep pullback. This could be the start of the second leg. A couple of targets for the bears include, kind of like yesterday, leg 1, leg 2, and a measured move of the breakout. So let's draw those and erase the other things. It always helps when you get more and more information which target is better. So you can see the measured move using the bodies. It's more aggressive, it's further than the leg 1, leg 2. But if the momentum is good for the bears, then we'll probably get there. And for the leg 1, leg 2, it's a little more conservative because you're using the deep pullback to project the measured move target, in essence. So instead of going from the close of the last breakout bar, you're going from the top of the pullback, the bar 18 high in this case. So this lower one is the bear spike measured move. And then we'll make the leg 2 a different color. So yesterday was a good example, and I made a mistake not talking about it, I realized later. But yesterday was a good example of a leg 1 equals leg 2 measured move. And part of the reason for that is that the market had so much trading range price action yesterday. After the breakout, the pullback, look at all the trading range price action. So it's a little more aggressive to be going for this breakout because in trading ranges, breakouts fail. They fail to reach measured move targets. It's better to be more conservative than aggressive. But in this case, it looks like we have a strong breakout and we're getting stronger continuation than we had yesterday. So we might get to the bear spike measured move instead today. But these are both popular targets. And we'll look to see how the market responds to those price areas. More follow through selling on 21. Now this has become a strong enough breakout for its own second leg. We can see it's clearly at least a second leg, if not a third leg. You can argue parabolic wedge, 1, 2, 3. The reality is this is a strong, tight bear channel. The only way you're buying is if you're taking profits on shorts. There's no reason to buy to get long here. The bulls aren't doing enough. Big open gap from the bar 11 low to the bar 18 high. This breakout, like I said, strong enough for a second leg. It could be a leg count reset. You can call it leg 1, but the reality is probably leg 2. But probably going at least a little bit lower. 21 is the first bar breaking out below the prior low of the day, so we still want to see follow through from the bears. But enough momentum, strong breakout. There's probably sell to close and sellers below. And then we got follow through on 22. We are testing this channel line, but if we do reverse here, the best case for the bulls is a minor reversal. Maybe we test the bar 16 low, that breakout point. But trading range is the best case, and more likely we get a bear flag and then lower prices. Strong enough breakout for a second leg, 5 bar bear micro channel, and we're approaching the leg 2 measured move pretty quickly. And then even more to the downside on 23, still sell to close, sell for any reason, and eventually the market's going to pull back. It might be here, the leg 1 equals leg 2 measured move, but that's not enough reason to buy. You can't just set a limit order to get long at the leg 1 equals leg 2 measured move. There's too much going against that trade. Yeah, it's probably support. We're probably going to bounce there. But it's a tight bear channel with really not great buying pressure at this point. Sellers above these bars scaling in higher. Probably going to get a second leg down for the bears. 24, we went straight through the leg 2 measured move. So now traders will look at the bear spike measured move instead. You can also you can extend it further, use the tails of the bars. I just happen to use the bodies. I always start with the bodies, but if we exceed this one, then this will be the next target. Still sell the close, but now we're really collecting a lot of bars. Might be 6, 7 bars. And eventually, a pullback becomes more likely. Bears will look to take profits, sell a pullback. But still, no reason to get long, okay to be short. And we're going even lower on 25, coming very close to the bear spike measured move using bodies. We'll probably find support here. This is more of a channel. It's a very tight spike and channel. Spike down to 21. This is a channel. It is a micro channel, but you can see the tails, a little bit of overlap. Easier to see on a 1-minute chart if this is a spike and channel. So we could come back and test maybe the high of bar 22. It'd be the same idea as what happened over here. Spike, pullback, channel, trading range. We tested the high of the channel. Spike, pullback, channel. We come back and test the high of the channel, and that becomes the trading range. Really strong selling for the bears. So again, no reason to look to buy, but okay to look to take profits at support. And then we bounced on 26. We're testing the bear spike measured move. Looks like we missed it by a tick. We'll probably get there. 26 is a bad stop order sell signal bar. It's probably buyers below or a minor second leg up. But this bull bar is due to bears taking profits, not bulls buying. Low one, 27, but now we have a low one after 2 or 3 legs down. There's probably buyers below 27. However, it's still too aggressive to be buying here. It's a tight bear channel, so you should only be looking to trade in the direction of the channel. Bears are selling above bear bars, really selling above any bar. You can see they sold above 26, 25, and they'll look to take profits below bars, but there's still enough momentum. Let me just show one more thing. Where are we in terms of time? 11:45. So if we go to the 30-minute chart, here's 11:30. Do you really want to look to buy when this is what you're getting? It's obviously a very strong bear spike, and it's not obvious that it's a sell vacuum test of support in a trading range. And that's just a reminder of what a tight channel on the 5-minute chart looks like on a higher time frame. So no reason to be looking to buy in here, other than buying to take profits on shorts. 27, low one, but low ones are better when they're early in the market cycle, like bar 18, over here, bar 11. But now we've had a couple of legs down, so we might start to go more sideways here. 28, strong bear breakout, getting below the bear spike measured move, so I'll just move this down to here. And this is the new target for the bears, using the bear spike extremes, the 12 high to the 15 low. A lot of momentum, we'll probably get there, but my one concern is that it might be a parabolic wedge, 1, 2, 3, and parabolic wedges, as I just showed, are breakouts on higher time frames. So it's still a bear breakout, still better to be short. It's always in short, but when you have consecutive sell climaxes like this, the market becomes more and more likely to pull back, and traders would prefer to sell on a pullback rather than staying short. So we could bounce here and then go for the lower target. Buyers on the close of 28, bears see it as a good price to take profits. Still no reason to buy. It's a very tight channel. The bulls need to do more than a bull bar with a huge tail on top. But it's not a good sell signal bar below 29, so bears will also take profits below that bar. Inside bar 30, same problem for the bears. Not a good sell signal bar. The context isn't great. It's a tight channel, but we've had 3 legs down, 2 or 3 legs down, depending on how you look at it. And a pullback is becoming more and more likely. It doesn't mean we're going to have a major reversal. It just means we might have a couple of legs sideways to up for at least maybe 10 bars. Maybe we'll test the moving average, maybe test the 27 high, maybe even the 22 high, or the 16 low. There's breakout points and resistance levels above that will likely get tested. It's unlikely we stay in this tight channel for the remainder of the day. However, this entire spike is leg 1, Markets are fractal, so a strong leg one here, pullback, second leg, but this entire breakout's leg one, so we can get a deep pullback, and then another second leg down that's pretty much similar in size to this. Markets like symmetry. As far as bar 30, probably buyers below, minor reversal. 31 bear breakout, closing below, good for the bears, but we're getting more and more overlap. Small bar on 31, bears might use it as an opportunity to exit shorts. Nested 3 legs down, and then bull bar 32. So again, more likely due to bears taking profits, but 32 is a good looking bar for the bears. Now bar 32 is a minor leg one, very similar to 16 and 17 over here, or there's a couple of them over here, like bars 9 and 10 are a minor leg one, bar 20 was a minor leg one, and you could argue 24, you can argue this one. The problem with them is that they're minor and they're counter to the direction of the overall regime. Clearly the market's bearish. So do you really want to buy the close of a big bull bar when the market's bearish? Probably not, because that's exactly what the bears are looking to sell. In bear channels, bears sell rallies. So there's probably sellers above 32 scaling in. But it might be strong enough on 32. Buyers below, buyers at a pullback for a second leg up. And then you can see what happened on 33. So traders sold the close of 32, but 33 was an inside bar. Bears who were short on 31, disappointed by 32. They're using the pullback on 33 to exit their shorts. They're disappointed, and that will lead to a second leg up. 33, low one, but inside bar. Now we've gone sideways for 5 or 6 bars, probably buyers below 33. 34, bear breakout, but failed, closed above the low of the trading range. Still a tight bear channel, and not great to be long, but bulls will buy below 32, betting they'll get a second leg up, but they are only scalping. 34, we have almost an outside down bar. That's a second leg for the bears, and to nested wedge, a couple of different ways to look at it, from 28, 31, 34, 3 pushes down, and then in here to even nested 1, 2, 3. So probably buyers below this doji bar. Lots of trading range price action, consecutive sell climaxes will probably start to correct fairly soon. 36 bull bar might be the start of a second leg up for the bulls, even though there's a deep pullback. This might be leg one, deep pullback, and then a second leg. Bulls who bought the close of 32 are disappointed, so that becomes resistance in this area. 36, the bears were disappointed getting out of shorts, and the bulls might be buying for a second leg, so we might go a little bit higher. And then 37, we are rallying for a couple of bull bars, bull breakout, and good follow through, but the context is still bad. Now we have 2 or 3 legs against a bear trend. You can even call it an expanding triangle. We're getting lower lows and higher highs. So that's the same problem with 37 as I said with buying the close of 32. Strong enough leg for another leg up, but rather than buy the close, you don't want to buy 2 or 3 legs up against a strong bear trend. So there's probably more sellers on 37, the close, and above the bar scaling in at the moving average at the 27 high. Now bar 27, this high is a major lower high. The market broke out to a new low strongly, and this was the last major lower high. So if we get above this price, the market might be converting into a trading range. That's the best case scenario for the bulls at this point. A major reversal is unlikely. We hesitated on 38, sold off, but then the bar closed on its high. But it's just below the moving average, and it's still 2 or 3 legs up against a bear trend. The upside's probably limited. 39, a doji bar, it's a high one in bad context. Trading range bar, high in a trading range, probably high in a bear trend. So probably sellers above, but now this breakout has become strong enough. There's buyers below these bars scaling in for a second leg up. We went above 39 and then reversed. 40, strong bear bar, but the first reversal down will likely fail. There's probably buyers below for a second leg up. So even though it's a strong signal bar in a bear trend, not the best sell, not the best stop order short below 40. 41 triggered the sell, but went sideways, and that's disappointing for the bears. They might give up, and that might start to lead to a second leg up. Bad sell signal bar 41, buyers below. And then 42 rallied for that second leg. We're testing the same channel line I had drawn, a couple of ways to look at it. 42, it's a nested second leg or a third leg, 1, 2, 3, testing resistance. 42, limited upside, probably not good to buy. And then 43, we tested above the major lower high, 27, and then reversed down. Now we have a low 2 below 43, but it's a small signal bar. More likely, if we do trigger the sell, the stops will get run, and the bears need a second entry. Good entry bar for the bears, 44. Low 2, good entry bar, but testing low. In this trading range, there might be support below, buyers below, and a little more to the upside, because this might have been all one breakout, and then we pull back for a second leg. And then 45. We're sort of getting another expanding triangle. You can kind of see them all over the place. The market's just repeatedly going up and down in breakout mode. But we know the breakout direction favors the bears, even with all of this sideways to up. Remember this huge breakout. The odds favor a pullback and then a second leg down. So best case for the bulls is a trading range. And if the best case for the bulls is the trading range, and this is likely to be around the trading range high, maybe we get to the bar 22 high, then the odds are, if you're getting a third leg up, 45, not breaking out of anything, 45 is a better bar to sell. Follow through on 46, but small bar needs to be better for the bulls. They still need more. So bears will stay short and continue to scale in. And then we went a little higher on 47, 3 consecutive bull bars, 4-bar micro channel, bad sell signal bar, but context is better to be short. I think it's still always in short at this point. 48, we triggered the sell, but bad sell signal bar will likely pull back. If we go above 48, it's a bad high 1. There's sellers above. That's what happened on 49. Now we have a second reversal down below 47, pulled back. Now a sell on 49. Stop order sell setup. Not a great signal bar, but context is good, so some traders will sell on a stop below 49. Others, they see it's a trading range bar, and they'll buy below for a scalp. That's what happened on 50. Consecutive trading range bars, market's in breakout mode, and I keep saying it, it's more likely this is a bear flag. It is a bull channel, but bull channel means bear flag. You're more likely to get a bear breakout of a bull channel than a bull breakout, especially in this context. Lots of strong selling, going sideways to up, and it's common to do that around noon in the middle of the day. $51, another trading range bar, 3 consecutive dojis, bad buy signal bar 51. On the bull trend line, some bulls will buy, but it's not great. I've already had 3 legs up. Now you're getting a lot of trading range price action, probably sellers above 51. 52, we triggered the buy, but only closed above that bar. We're still within the tight trading range. And this looks like a bear flag, and so I think it's dangerous to be long at this point. Bear breakout 53. Pretty big bear bar, closing below at least 5 or 6 bars to the left, probably going at least a little lower. 53 is a bad buy signal bar, so if we get above it, there's sellers above. Follow through 54, breakout and follow through. This is a new leg 1. You can argue it's a big leg 1, and then maybe the start of leg 2. But here, you can argue 3 legs up, top of a trading range, and a new leg 1 breakout. The market cycle's resetting, so this is more likely to get follow through. 55, 3 consecutive bear bars. Bulls who bought below 52, betting it's a bad sell signal bar, are getting further and further trapped. They're disappointed. And at this point, it might be sell to close, and there's sellers above these bear bars for a second leg. Inside bar 56, low probability for a reversal because it's an inside bar, and you just had 3 consecutive decent bear bars that will likely get a second leg down. And then 57, continuing lower, micro channel since 52, that's about 5 or 6 bars down. Sellers above all of these bars. We might have support at the prior low of the day. Bears who were short down here, disappointed by the rally. But this is still a minor pullback, and this was so big that it could get a second leg down, similar in size. 58, another bear bar, nothing for the bulls to buy, although it's getting low in this trading range. Remember that the best case scenario for the bulls is trading range, but it could be a bear channel. Bull bar 59, but triggering a bad stop order. Signal bar on 58, sellers above, scaling in higher. The first break of this micro channel, there's sellers above, and bears will sell a rally like bar 59. And then 60 reverse down immediately. 60, you can argue 3 legs down, 1, 2, 3, bottom of a trading range. There's a reason to buy 60, but the context isn't great considering the big picture, bear trend, bear flag, maybe continuation. There were buyers on the close of 60, scaling in lower. That's a disappointing bar for the bears, but it's also not ideal for the bulls. The bulls were hoping for a bar like 45, but instead they got a doji, and they'll probably sell above 61. It's a bad stop order signal bar. And instead of going above, everybody just sold to close. 62 going lower. Now this is becoming a tight bear channel, and when that's the case, you only want to look to sell. We're breaking out below the low of the day over here. We're breaking out below the bear spike measured move using extremes, the high of 12 to the low of 15. And that would make the next target maybe a big leg 1 equals leg 2. We probably won't get there today, but maybe in later days. It also depends on which ones you use. If you want to use the more recent breakout, like here, that's more realistic. We could get to this one. So let me start actually with the more conservative one, and we'll go from there. So maybe that's it. Tight bear channel, only want to sell. 63, a rally, but it's an inside bar. Bears will sell above it. 64, going lower. Small bear bar, but nothing to buy. Sellers above. Outside up, but outside bars are expanding triangles. Trading range bar and a tight bear channel. Bulls will sell a bar like that and scale in higher. 66, bad follow through for the bulls. Probably sellers above, scaling in higher. The bulls are hoping it's a failed breakout of the low of the day. They tried once, they failed, they tried again and failed, but this is not a major bottom. The bulls have to do more. And in terms of this being a major trend reversal, here's a bear trend line break. You're getting a test of the trend's extreme and you're looking for a buy setup. But when the test of the trend's extreme is this tight, with so little buying pressure, you have to be thinking the bulls don't have it here. In best case is trading range, but more likely will continue lower. If you're looking for a major trend reversal, you don't want the retest of the trend to be this strong. Outside down 67, moving average test. Low 1 short, and a lot of sideways bars. There might be buyers below 67, but the context isn't great. If you're buying, you're looking for a scalp. You're betting that this breakout from the 65 low to the 67 high was strong enough for a second leg up. Small follow-through bar for the bears. Trading range bar. But do you really want to buy above 68? That's the flip side. Stop order buy is no good. So it's a reason to stay short or look to sell above. And then we sold off on 69. A little bit of a vacuum. It's a surprise. And the market has to go lower. Bulls were not willing to buy here. You have to go lower to find buyers. So we're coming closer to this leg 2 measured move. We might get there. Even though 69 looks exhaustive, we'll probably go at least a little bit lower. But it is an extended bear trend. You're getting sell climaxes here with pauses, and then the biggest one on 69. So that's a bar that bears might take profits on. And then inside doji 70. So not exactly what the bears want. We have a low one below 70 with likely more buyers below. 71 triggered the low one, but it's a small bar, still within 69, and the low of 69 will be support. Some bear sold the low of 69, disappointed by the pullback. They're looking to exit at break even. And then 72, that led to a second leg. So it's nested inside these tails here, but the market rallied from the low of 69 to the high of 70, pulled back. Now it's getting a second leg, 72. Bull bar closing on its high after an exhaustive sell climax. The odds are bears might exit above 72. We're getting late in the day, and trend days often have profit-taking rallies in the case of bear trends and profit-taking sell-offs in the case of bull trends. So there's an increased risk. Last 10 bars or so of the day here, 72, we might rally. 73, we have a follow-through bar for the bulls, breakout and follow-through. It's not a good follow-through, it's a doji, but it's the absence of a bear body, and now 73 is a bad stop order sell, so probably buyers below 73. And then we rallied on 74. It's looking like this was an exhaustive sell climax, and bears are taking profits. We have another major lower high here, 67. If we get above it, the market's clearly in a trading range, although at this point it probably is. Big down, big up. This looks like a trading range. Strong enough up for a second leg. 75, we went above 67, confirms the market's in a trading range. We have a higher high. Bear trends get lower lows and lower highs, and at this point, 75 went above 67, so we have a higher high. And bear trends don't have higher highs, so now we have a trading range. Strong enough rally for a second leg. Bad sell signal bar 75, probably buyers below, but might be high in a trading range, so we could find resistance up here. And then 76, we have a strong bull bar, but this is a parabolic wedge, and can you see the pushes? We rallied on 72, paused, rallied on 74, paused, and then we got the strongest rally of these bars on 76. So parabolic wedge, exhaustive. Let's look to the left. Remember, bad sell signal bar 52, there's resistance above, and if we look where we actually went, it's not very clear. There wasn't anything extremely specific that catches my eye. I know that maybe this breakout point was a target. We didn't quite get there before they sold the close. So parabolic wedge, and we're getting high in this range. Big down, big up, and it's a trading range. So buy low, sell high. We're getting high in the range here with a third consecutive climax. So everybody sold the close of 76. Big bear trend bar 77, but the context is bad. Big down, big up, big down. If it's bullish, they're selling. If it's bearish, they're buying. We might have a 50% pullback of the bull breakout. It's a little bit deeper. But you will have buyers below for a second leg. I mentioned this breakout strong enough for a second leg. We're testing below 50%. This bear breakout strong enough for a second leg. Big up, big down, big confusion. 78, there's buyers. We rallied but did not quite get back to the 77 close. And this might be the start of the downside second leg for the bears. Consecutive inside bars, 79. It's breakout mode. We're getting very late in the day. I'm probably going to continue to go sideways. Another inside bar, that's 3 consecutive inside bars, which is fairly rare to see. So bar 80, 3 consecutive inside bars. It's a triangle. We're getting higher lows, lower highs. Breakouts will likely fail. And then 81 broke out by 1 tick to the upside, but failed, and lots of overlap into the close. So we ended up getting a bear trend day with a big tail below the bar. You can see it here on the daily chart. For always in today, for me, clearly always in short on 13. 14 certainly confirmed it. And then never flipped to always in long here. We're still always in short. And then eventually it becomes more and more two-sided, parabolic wedge and nested wedge. So you can get out of shorts down here, take profits. Although I don't think it ever really became always in long. And you can argue it did, and we had this bull spike, and we got a spike in channel, but it's really minor, and it was really okay if you held short. And then always in short by bar 54 or 55, probably 54, breakout follow through, and probably a leg one reset, but certainly by 55. If it was always in long, we flipped back by 55, and then exhaustive sell climax, bad follow through, probably okay to get out of shorts down here. And then 74 might have made it always in long, bull breakout crossing the moving average, but now you're getting into big down, big up territory, so always in long, but limited upside. That's what happened on 76. Good looking bar, but high in a trading range. For stop orders today, I thought it was reasonable to sell below bar 12. It's a second reversal. Expanding triangle, trading range open, double top, micro double top. And then you could sell below 13, 14, sell below the low one, 18, always in short, sell below any bear bar. Low one, 27, not as good as 18, but still okay. And then okay stop order buy above 36 for probably a test of the moving average. It's a really minor setup. There's an imbalance. There's a consecutive buy or consecutive sell climaxes, decent signal bar 36, but you're not expecting a bull trend. You're expecting a minor reversal, and in this case, probably a test of the moving average, which we got, plus a little more. And then for stop orders, you could sell below 53, 54. Tight bear channel, you could sell below any bear bar. Again, it's always in short, 57, 60. And then 67, it's okay, but to low one after two bigger legs down, and you're getting a lot of trading range price action here, outside bar here, outside bar here. The downside is limited. 72, aggressive, but you can buy above 72, betting the bears will exit shorts. We just had an exhaustive sell climax on 69, and we'll at least test the 67 high. And that's about it for stop orders today. For limit orders, sellers above 1, buyers below 2. Sellers above 3, they scaled in. Sellers above 9. Sellers above any of these bear bars in the spike, so sellers above the bad signal bar 15 or 14 getting filled here. Sellers at the breakout point over here, 50% pullback around here. Micro channel, sellers above the first pullback, they got filled on 26. And then here, another bad buy setup, 31, sellers above. And then bad low 1, 33, tight trading range. You could buy below it, it's aggressive, but you're also expecting a second leg after 32. So a reason to buy below here. Micro channel, buyers below the first pullback, they got filled here on 41. Not a great sell for a swing. You can buy below 43, but although at a distance below, we'll probably test lower. Bad sell signal on 47, you could buy below it for a scalp. But these are sort of extra trades. They're not really like the best of the best. You're buying high in a bear flag. It's really not necessary to be taking these limit order trades. Bad sell signal bar at support, the moving average, you could buy below 49. Bad buy, 51, you could sell above. Micro channel, sellers above the first pullback, above 58, triggered on 59. And then again here, sellers above 64, outside bar triggered. Bad low 170, you could buy below. And then 50% pullback or below 76 or 75, buyers below for a second leg up. And that was about it. And where do we go tomorrow? Strong enough breakout. that it's disappointing the bulls, but it's still overall a trading range. The market tried to break out below the moving average and failed. It closed above it. So we might be in a broader trading range. It could even be an expanding triangle with some pushes down and up and down again. We also tested the breakout point I had drawn before, this one here. Fell a little bit below it, but found buyers a little bit below. Pad buy signal bar, today's daily chart bar. There's probably sellers above today's high if we get there. And a decent rally into the close, the moving average support, this rally into the close, enough that it's probably a trading range. This was a major lower high. We went above it. You can call it an expanding triangle, but in any case, it's a trading range. So probably buyers below today's low and sellers above resistance levels, high in the trading range up here or here. But probably go more sideways. We've had a couple of bars down in a bear channel, and it's pretty broad. And I think because of the daily chart context, the downside's limited now. We're in a tight trading range with buyers below. As always, please feel free to leave questions in the comments and include timestamps for any question specific to this video. Alright, hope everyone has a good rest of their night. Thanks for watching.